Is this the most underrated business? Sporting profit margins that rival Apple, Alphabet, Amazon, Berkshire Hathaway, Eli Lilly, Broadcom, and Tesla, this under-the-radar industry has generated growth and profits for decades. Water utility development in America began with the early European settlements. In the 1600s and 1700s, most American colonists relied on wells, rivers, and rainwater for their water supply. These sources were often inadequate and unsafe, leading to frequent waterborne diseases. The first public water systems in America were established in the late 18th and early 19th centuries. Philadelphia was one of the pioneers, building a waterworks system in 1801. This system, powered by steam engines, drew water from the Schuylkill River and distributed it through wooden pipes. By the mid-1800s, other cities like Boston, New York, and Baltimore followed suit, constructing their own water systems to meet the growing urban population's needs. The late 19th and early 20th centuries saw significant advancements in water utility infrastructure and technology. The development of cast iron pipes replaced the less durable wooden ones, and innovations like water towers and pumps improved water pressure and distribution. Additionally, the introduction of chlorination in Jersey City in 1908 marked a major milestone in improving water quality and public health by reducing waterborne diseases. Water utilities are remarkably stable and profitable businesses that benefit from regional monopolies and consistent demand for water and wastewater treatment. American Waterworks, headquartered in Camden, NJ, the largest publicly traded water utility, with roots dating back to 1886, has delivered positive operating profits for 35 consecutive years and has only experienced year-over-year annual revenue declines 3 times. Similarly, Essential Utilities, Inc., a Pennsylvania-based utility company, also founded in 1886, has delivered positive operating profits every year since 1990 and has only experienced 2 years of declining revenue. There are only 5 publicly traded water utilities in the United States: American Waterworks, Essential Utilities, California Water Services Group, American States Water Company, and SJW Group. It may be a small group, but it is a mighty one. As a group, these businesses have grown their revenue at a 6% compound annual growth rate for the past 20 years. Pre-tax earnings and earnings per share have grown at roughly 8.5% and 6.4%, respectively. This growth is faster than nominal U.S. GDP growth, which has averaged approximately 4.5% over the last 20 years. Over the past year, water utilities as a group have generated an operating margin of 33% and have consistently earned roughly 30% operating margins for the past 20 years. The industry's 12-month track record puts them ahead of almost every other industry, except for real estate investment trusts and tobacco companies, which earn 40% plus operating margins. This performance puts them ahead of the software and media industries, which are widely considered high-margin businesses. It also puts the group well ahead of gas and electric utilities, which earn high teens to low 20s operating margins. It's important to note that state and municipal regulators limit the rates water utilities can charge its customers. This effectively caps the returns on invested capital that water utilities can earn. However, in exchange for a fixed rate of return on deployed assets, they are granted local monopolies in the regions the business services, effectively guaranteeing a stable source of revenue and profits. In summary, water utilities represent a unique blend of stability, profitability, and growth potential. Their critical role in providing an essential resource, combined with their impressive financial performance, positions them as a formidable yet underappreciated segment of the American economy.